Good morning, all the students and the faculties of Global Institute of Science and Technology. A warm welcome to GIST IIC Unit online session on angel investment. So, what is angel investor? So, basically, proceeding to the sessions, let me now take you to the uh, previous sessions that we have learned how to accelerate on what is the incubation, how to think of a business idea, how to start it, what are the legal steps to be taken. So these are the all step by steps for some parameters we follow while listening to many experts related to entrepreneurship era and all these companies and the VCs and CEOs and founders of many companies. So today we are going to listen to a Zucate. Zucate is a team. It's a company where we'll be knowing about the what is the funding that the company. If somebody is thinking of any idea, somebody is uh, proposing some idea to convert it into some startup. So it is having an incubation center. It is having some accelerator. Those who are helping initially, and somehow in the meantime at the very beginning it's very difficult for anybody to incorporate ideas into startup is basically the funding. So how this funding comes, what are the process of raising the funding, fund allocations and all these things. So for that today we are considering that angel investor is one of the most important person. I must say that it's a very important person to any organization and startups who've been thinking of been doing something without any investors. It is very difficult to start any business or to run any business. So now, and I'll be requesting our respected convener of IIC GIST unit, and I'm very much thankful to him that he has organized these sessions consecutively of organizing all the this is IIC's 5.0 activity calendars, quarter four events. And so I'm also thankful to the president, Sheikh Mahidul Islam. So we are together again gathering here already more than 60 students and faculties together. We have uh, them united into a single platform. Now I will request our respected convener, sir, Mr. Gaurichandra Pal, to play the video and to let the students and the faculties know that what actually the funding process is and how this funding investment is actually helps a startup to grow up and to carry forward their business procedures. They're helping in their converting this idea into a smart startup and a successful startup, which led them to form a unicorn, which is very numerous number of unicorns have been found as related to 10 years back from now. It was there was only one unicorn, and today we are having more than 100,000 unicorns we are having in India. So India is growing within this startup era. It's like a devastating change is, and which includes the conclusion. The conclusion is that we are growing very fast, and so I will request Convener sir to please play the video and help us to enjoy these discussions regarding funding and other investment process. Thank you very much. Over to you, sir.
Confirm whether my screen is visible or not.
Yes, it is visible.
It's clear enough for the investors to understand what your business is doing. So on an average, an investor every day receives somewhere around 1,500 pitches in their inbox. So make it so compelling. The subject line should be so good that they end up opening your pitch deck. Otherwise, it's like lost in those 1,500 pitch decks that they receive every day. And the second version of the pitch is like a visual pitch deck. So when you are yourself standing in front of an investor, so that's when you should be doing a visual kind of a pitch deck. This kind of a pitch deck should not have a lot of text. It should be more visual in nature. And here you need to follow the 30-20 rule. So not a lot of text with a font size of 30, visible to anyone sitting in the room from any angle and any direction. So that's what makes a great pitch deck. Now, what should you be doing while you are presenting your pitch is like building up a story. You should not be presenting your pitch just like telling something about what's written in the slides. So every pitch deck would follow a story that would have like your own experience, your own emotions going into what made you start that with that idea is what they want to listen into, because they actually end up listening to a lot of pitches every day, and it's like a very boring kind of an exercise for every investor. So make your pitch like a very compelling story, a story that has your touch and your emotions attached to it. Now let us understand what goes into building a pitch deck. The first slide that you should have in your pitch deck is the overview. Like it's like an explanation of what your product or service does, not too technical, just an overview, just to understand what exactly are you doing in your startup. It shouldn't be like n number of sentences going into this slide. Who are you? Why are you here? That should be the motto of this slide. And always try to keep this slide short and sweet, because it is the slide that will catch the investor's attention. Once you have lost your investors' attention on this slide, they will not listen to what goes into the other slides. Don't try to put too much text onto this slide, and try to create a hook. A hook like don't a lot of companies these days come up with hooks like we are the Uber of, we are the Amazon of. Don't try to create hooks of those kinds. Try to explain what your startup does in a very succinct way, in a single line, that we are doing this through this. That's all. And doing it for whom? Don't try to put a lot of information here, because it's like either making it the pitch or breaking the pitch. So these first 2-3 seconds of your pitch would be like building your reputation, building an image of your startup. So also one word of caution, most of the times you would be getting hardly 5 minutes to pitch your idea. So don't waste a lot of time uh, explaining a lot of tech details while you are pitching, because no one is interested in understanding what your IP is. Don't show them lots of IP documents. Don't show them a lot of patent documents. They are not interested. They are just interested in understanding what kind of business are you going to do, who are your customers going to be. So those 5 minutes are the only thing, is the only time you get to interact with the investors. Just try to build an interest into your startup. Don't try to put too much information, and don't try to overdo things when you are getting a chance to pitch in front of investors. The next slide that you should have is the team slide. So here you have to show who are the people behind the idea, and what kind of roles are they playing in building your startup. Now most people when they build their startup, show themselves as the most important person in the startup. But trust me, no investor would put money into only one person driving a startup. So you need to build a team from day one, a team which has complementary skills. So if you are too strong with the tech part, then try to get a person who's very strong with the business part. An ideal team generally consists of 2 to 3 people, not more than that, because history says that when you have more than 3 people, the the team kind of breaks up, and it's like becomes a non-continuous entity. So 2-3 people, because you can handle all discords and quarrels that happen within the team. If you have only 2-3 people, it's manageable. So you need to talk about who are the founders, who are the key team members. Sometimes there are key personals that a startup has apart from the founders, like the CEOs and CXOs and CTOs. You need to name them, who are the core team. Don't go on bragging about entire team of 40 people that you have built, maybe developers and interns. Don't talk about them. You just have to talk about the key team members and key advisors and mentors. So when people of repute who are advising your team, who are mentoring your team, these are key advisors or mentors. Be very specific about your mentors, because not everyone is a mentor. Don't try to just put the name of a mentor just for the sake of it, because angel investors, all other kind of investors do know whether you are faking a mentor or not. And you should always have a mentor who is continuously involved with your team. And probably we always are investment firms likes mentors who have entered into an agreement with the startup. So probably you should also think of it in that way only, that you should be entering into an agreement and decide on what your mentors should be contributing to the startup and how many hours are they going to contribute weekly or monthly. So based on that arrangement, we actually try to I mean, as a startup, you should be portraying your mentors in that way. Otherwise, it's like another name in the team who doesn't contribute. A lot of mentors in the industry won't contribute, but you would see their names here and there in every other startup. So what other things that you need to put up in the team slide is like team members history. I mean, what kind of history? If you don't have any history, like you have started your startup just out of college, then just mention it that it is out of passion you are doing it. Then you talk about educational industry backgrounds for at least the advisors and mentors you have. So you all are students, I understand. So you won't be having a big history of your own team members, but you can always tell the history of educational background and industry experience of your key advisors and mentors, and also specify what roles are they going to play in the company, the founders, the mentors, the key team members, what are they putting in the plate for your startup. Next thing that you should focus on in this slide is like explain the unique value that every person has been bringing to the startup, because every person is in your startup is there for a reason. So please highlight what all are they bringing to your startup, what unique value are they contributing to your startup, and also talk about what kind of passion do they have for the project. I mean, why did they decide to join your startup? Did you yourself decide to work for this startup? That all should come, the motivation, the passion, the problem that you guys encountered, that should come up in this slide. The next slide that your pitch deck should have is the problem. So problem is basically the reason why your startup exists. You have identified a problem and that's why you came up with the idea of starting a startup. So here you have to be very specific about what problem you are trying to solve and is it actually a problem. Now, a lot of startups come to us with some problems which they feel that exists, but it doesn't actually exist, and they try to convince us that it is actually a problem when the investors don't listen to them and they feel otherwise that the problem doesn't exist. So please always focus on a real problem. Don't focus on a problem that is not real. So you have to describe the problems from the customer's perspective. So what do the customers feel like? It's not your problem that you are solving, it's the customer's problem you are solving. It's the customers who are going to buy your services. So be specific about what kind of pain points do the customers undergo. Don't talk about your own pain points when you are talking about the problems. A lot of startups who come to us end up telling us their own problems and never tell us what the customer actually faces. The next thing that you should focus on is the kind of person this product is for, like the persona of the customer. Persona would typically talk about the age, the economic background, the geographical region, the income group, the gender that faces this problem. So you have to build an ideal persona of who your startup or who your services or product is targeted towards. You need to build up a character sketch of the typical customers. If there are three kind of customer sets, then you have to build three kinds of personas. So if you are, say, a startup that targets students also, teachers also, and parents also, then the persona should go about describing what services do you have for students and what is the typical kind of student who would be using your product. Then you need to build a persona for the teacher and the kind of services and pain points they undergo and the services that you would be delivering to the teachers. And the third would be parents, wherein wherein you need to build the persona of the parents also. What kind of income category are you targeting? What age group parents are you targeting? So that's how you build, go about building about on the persona. Now, the next point that this slide will take care of is how the startup will solve it. Now, here you don't have to describe in detail about your solutions and services. It would be just like Pankaj sir, can you please mute the person?
Yeah, I have muted everyone except you. If still someone is there, please go on mute. You are not supposed to unmute yourself during the presentation. Thank you.
Yeah, so here you just keep talk about what your startup does to solve the problems that you have identified, and not the entire solution is expected here. What would be the key elements like in your product or the service which will help alleviate the customer's pain points? And you can also talk in one short line, one small line about the tech involved, because most of the startups that we encounter in our venture is like tech startup. So you can always talk about a single line about how you are using tech to solve it, and what kind of tech is going to solve the problem that the customer has. The next thing would be the solution. The solution is like what your startup does. What product have you made? What services have you planned for solving the problem that you've identified? So this is like a slide that will tell in detail about what your startup does, and also will tell about why it's compelling, because there are a lot of other startups also who are startups competitors who would be doing the same thing. So here we would want to understand, why is your solution so different? Why is it compelling? Why should we be putting our money onto you? Because n number of startups are doing the same kind of things. You need to stand out in front of them. It's not like मैंने ऐसा किया, but ऐसा differently कैसे किया is the most important thing when you are trying to explain your solution. So here you can also use explainer videos about your product, a small short video, not more than a minute, because that's when the drop happens. More than a minute, no one is going to see what your video tells about. Product demos, if you have already created some product, then you can clearly show a demo of your product, maybe with an actual customer, and not a lab kind of a setup where you just put some teachers or your known people and create a demo. Try to create a demo with an actual customer, or sometimes product screenshots can also work if it's a bulky or a heavy product. Then you can also show us some screenshots of how the product development has, how far have you developed the product, how has the product development been, what's left. All this can be put into this slide. So you can create 2 or 3 more slides in the solution part to show what kind of product have you created, in case you are not able to accommodate it in a slide. The next slide would talk about product. So this would also have similar kind of videos, explainers. Some people who have not actually created any product, they can also talk about POCs. POCs are like proof of concepts that you have carried out, maybe a market research, or maybe a smaller version of the product, the alpha version that you have created and tested it out with the actual customers. You can put out POC data also here. Also try to include testimonials of actual customers, testimonials of how the user experience has been, how have they understood what, how was their feeling with the product. That's what you should be including in this slide. Also talk about value proposition. Value proposition is like, what value are you delivering? What is your customer getting out of it? आप exactly क्या दे रहे हैं? What is the value? अगर मैं किसी कस्टमर ने आपके प्रोडक्ट को खरीदने में पैसा लगाया है, then what is the value that they are deriving out of it? That's what you should be talking about in this slide. And also talk about the impact. Now, since you are a startup, you should be creating some kind of impact in the society too. You should be contributing towards the nation. You should be contributing towards the society. So what kind of impact are you trying to create? Because most of the companies would have some kind of impact creation on their customers. Impact is like a very broad kind of a term. So find out what kind of impact are you creating in the market, and do tell us about the impact also, because most of the investors do look to this aspect very keenly. The next slide will talk about the market opportunity. Market opportunity is like how big is your market and what kind of market awaits your product. What size of market do you have for yourself? If it is not a clearly good enough big market, then investors would not want to put in their money if they don't see a bigger market inside. So in the market opportunity, what you should be looking at is the total addressable market. It is also known as TAM. TAM is like the total available market or total revenue that you could be, that your product or service can earn if you could say achieve 100% of the market share. Say, agar you are selling soaps, you are making soaps, then your entire market, jisme you have no competitors, you have no other soap company operating in that market, वो जो size of the market है, वो जो 100% है जो आप achieve कर सकते हैं, is the total addressable market. Now the serviceable addressable market is that segment of total addressable market जो आपका product या service target कर रहा है. Not अब आप कोई भी product जो market में launch होता है, that cannot achieve 100% of the market, right? You have competitors, you have other aspects, you have low income group who might not be able to buy, then there you might be using some kind of tech which is not usable for, say, people who are not very aware of tech products. So you need to remove that portion of the market and achieve that portion of the market which you can actually address, which is actually within your reach. Now, if you are making a very high-end IoT device, then your entire market won't constitute of the villages probably, because they won't have the to support your service or product that you are going to deliver. So you need to remove all that from the TAM, and that's the addressable market that you can probably service. Out of that serviceable addressable market, that's SAM, you need to find out what your target market is. Now you know that, say, 80% of India's population can be targeted by your product or service, but practically you cannot achieve that market also, because there are some kind of limitations that your product will have. Your pockets will be limited. So you need to figure out what portion of the serviceable addressable market you can capture. So it will depend on your product. You need to identify who will be the people who are going to buy your goods. Your marketing plan will also determine what your target market looks like. A marketing plan would have your marketing budget, and then it would have some kind of distribution channels. It would have some kind of strategies in place that will determine what kind of market share you can achieve. Then you need to identify your competitors and how deep their pockets are, कितना पैसा है उनके पास और कितना strength है उनके पास और कितने साल से established है market में. That will also determine how much market can you achieve, plus the funds available with you, कि आपके पास कितना पैसा है and how much money do you have and how much can you spend to achieve that target market. Now, typical slide of market opportunity of Airbnb when they pitched for the first time looked like this. So they base their market. I hope everyone understands what Airbnb is. Like, Airbnb is a booking kind of a platform that gives you homestays in different parts of the world. So how they took out their market size is like, they identified how many people take trips worldwide. Why did they base? Because whenever you are taking a trip, you would stay somewhere. So they based their market on the number of trips. So they identified that people worldwide were taking 2 billion trips. So this was their total available market. Now the SAM that they identified was $560+ billion budget that was allocated, and the share of market that they probably could target based on the factors that I told you in the last slide was around 15%. Now, this is what you need to identify when you are finding out what kind of market size are you targeting. So, and whenever you are doing some research on your market size, no, it will be all secondary data. You will be basing your data on some source from Google or some source document. So always mention the source document from where you are taking this data. Otherwise, it's like no one is going to trust you on your figures and numbers. So always put a source from where you are taking your data. The next slide will talk about competitive landscape. Now, competition is like what alternatives exist. Competitors might be direct competitors, and competitors could be indirect competitors also. So you need to identify what kind of solutions exist. Like, let me quote our example. So UPate is an edtech platform. So for us, direct competitors are like Byju's, Topper, Vedantu, but we have indirect competitors also, which are like the tuition centers, which are the coaching institutes that are available in the market. Because apart from online learning, there are these small coaching institutes and tuition centers that are available. Gali Mohalla, and these are also our competitors, because once a student goes there and pays there, they will be coming to UPate to pay. So we need to identify my competitors कौन है. यहाँ पे सिर्फ direct competitors not identify कीजिए, indirect we identify कीजिए, because they are also potential competition for you, because they are also taking away that portion of money from your startup. So here you need to identify what your status quo is like. Status quo means मैं कहाँ खड़ा हूँ, मेरा startup कहाँ खड़ा है या खड़ी है, is the status quo. Don't place yourself vis-a-vis your competitors based on features, based on imaginary magic quadrants kind of things. Just tell us, where do you stand in the market, what do you do, and what do you do differently from your competitors, and what sets you apart. कि आप में क्या different है, and why should we be funding you and not the other competitor that you have. A lot of times what happens is, you know, when you go to an investor and tell them about competitors, they find your competitors more worthy of investment, and they just go to the market, search that competitor and put that money onto those competitors. So please be clear about what sets you apart when you are talking, when you are placing yourself in front of n number of competitors that you have. Here you should be talking about vision. What vision do you have, and how have you placed differently your how have you placed your startup differently in the market, and what are the, you should always be speaking about barriers to entry. Barriers to entry means why is it not possible कि आपका competitor short term में आपके market में enter कर जाएगा. So here you should be talking about key partnerships. You have partnered with Amazon, so you have partnered with a very big company like Google. So you should be talking about key partnerships, and be very particular about partnerships. Unless and until you have signed the document, don't talk about partnerships, because there are a lot of non-declaration things that are involved that goes into agreement with these big giants. So be careful about naming them. Name them only when you are sure that you can name them in front of investors or in front of third party. So just beware of these things. Then you talk about your intellectual property, whether you have a patent or maybe a copyright or a trademark, whatever kind of intellectual, some design patent or something like that. So talk about your IPs, because these are the things that will create a barrier to entry for your competitors. In the next, maybe they'll be able to create the product, a similar one, but it will take time. So that's where investors get interested कि आपने कुछ तो specific create किया है जिसके कारण आपके competitors उस market में नहीं enter कर सकते. So when you are presenting your competition slide, don't do this. A lot of people do this. बहुत सारे ticks and crosses बना के tell us कि अरे मेरे पास 20 features हैं और मेरे competitor के पास 4 features हैं या 2 features. I don't do this, because it's like they are also a tech company, you are also a tech company. When you are out in the market, you have 10 features, they'll copy it. So don't try to prove us that आपके पास 10 features are, that's why we would be funding you. The second one was what Airbnb did. They created an imaginary magic quadrant where they placed themselves in the best quadrant possible in the affordable online transaction part. If you can understand, they placed themselves. So they placed themselves in the best magic quadrant, and they told that the investors that they are the best because they were affordable and everything could be done online. Because since you are bragging about your own startup, you will always end up placing yourself in the best quadrant. So don't create imaginary quadrants for the investors to understand, and don't try to tell them that you are the best in the market, because apni nazron mein everyone is the best. So don't try to do that. No one trusts a startup on those factors. And the third thing that Slack did was like created a petal diagram and placed themselves at the center of everything, wherein they said that they are the ones who are the best because they had all the features combined, and they had everything in their app. So that is also a strict no-no when you are comparing yourself with a competitor. So don't try to do that. Because क्या होता है कि आप अपने आप को हमेशा बेस्ट में पोर्ट्रे करते हैं, आपके पास वो हो नहीं हो. सो डोंट ट्राई टू place yourself vis-a-vis your competitors based on features. आप अपने आप को how are we different, what are we doing differently में place कीजिए and talk about your vision. That's the most important thing. The next slide should be talking about your marketing strategy. Marketing strategy is like, how are you going to market your product? Since you have created a product, it's very important to market your product because the world doesn't know that you have created a product. So you need to make people, customers, and everyone aware about what exactly are you creating and how, and penetrate the market with a very definite marketing strategy. Now your marketing strategy should be another presentation which you should keep for yourself, and it should have everything laid out, the strategy that you are going to follow, the sales funnel that you are going to have, the go to market strategy that you are going to place, the budget that you are going to allocate, the costs that you are going to incur. Everything should be placed into that document, and the gist of that should be placed into this slide when you are pitching. So you need to tell us how are you going to sell your product, what will be the mode of selling your product, and also you need to tell us how much will it cost to build that sales engine. Sales engine is like the entire sales strategy that you are building to sell off your product. So how are you going to market it is the most important thing. Be very concrete about your marketing plan. Tell us how are you going to penetrate into the your customer segment. Tell us how are you going to make them aware that this product exists, and tell us how are you going to sell it, and then tell us how much is it going to cost, because a lot of startups have allocate enormous amount of money to their marketing strategy, and then they end up having no money for their tech development or the salaries and every other cost that they incur in the startup. So don't do that mistake, because once an investor has found out कि यहाँ पे बहुत cost जाने वाला है marketing में, they'll not invest on your startup. The next thing that goes into your pitch deck is the business model. Business model is like, how are you going to make money? कैसे पैसा आने वाला है startup में? How are your revenues going to pour in? And when are they going to pour in? That's what your business model talks about. So here you need to tell us how are you going to make money? कितना पैसा मिलेगा per unit बेचेंगे तो कितना मिलेगा per service? How are you going to price your, if you are a service startup, then how are you going to price it? If you are a product startup, how much have you priced the product at? If n number of people buy, then at what point of time do you realize the money? How are you going to collect that money, whether through online channels, offline channels? How all this come into business model. Now, why is it important? Because everyone wants to know that you are out there to earn money. And even if you are not making a profit, it doesn't matter to the investors, but you have a solid concrete plan to earn money is what matters for investors. Now, there are certain examples of business models that are out there in the market. The first one is the commission model, on which most of the e-commerce startups work, like Airbnb. They charge a commission on every transaction that you do with the hotels and the homestays. Then there is freemium model, which LinkedIn follows. Companies like LinkedIn follows. LinkedIn gives you the first year product for free, and even YouTube does these days. So the first version of the product is free, and after that, it's like some videos and some features when you want to add on to your profile would be charged. So free to premium. That's what freemium means. Subscription model on which Netflix works. Every month they give you a charge somewhere around 700 rupees, and you have to again and again subscribe every month. Marketplace model is what is followed by Flipkart. So they take commission from every seller in the marketplace that they have created, the e-commerce portal that they have, उसमें से हर seller में से they take commission. That's what every product का अलग commission. That's a marketplace model. Bundling model is what McDonald's does. So everyone who has gone to McDonald's must have seen that they make combos, and that's their most selling model of McDonald's. Adobe Creative Suite अगर आपने यूज किया है तो एक प्रोडक्ट के साथ दो चार प्रोडक्ट और बंडल करके they increase the price and sell it off. Razor blade model is like followed by Apple. What happens in razor blade model is the first is like जैसे razor blade होता है जो shaving के लिए यूज करते हैं, उसमें first वाला जो आप razor खरीदते हैं that is more pricier than the replacement one. So they, what Apple does is they sell their MacBooks and iPhones for a very high price, and then they keep on charging you for smaller services. So they sell off the high end product first, and then thoda thoda karke they collect from every product. That's the razor blade model. Product to service model is what Uber does. I mean, they have a product, they have cars with them, which they take on rent, and they offer it to you as a service. You use the app and book the car and use it as a service. That's product to service model. A product to service model is quite popular these days. A lot of companies do so. Leasing model is like followed by Furlenco. If you have heard about a company known as Furlenco, they actually rent out or lease out furniture for people. So every month you have to incur some costs for taking that sofa or maybe bed or whatever furniture you require in your house, and they take a lease out of it. So every time for a month or have monthly plans, they have either 15 orders, you count the revenue that you get from those orders, and then you divide that entire thing with the number of orders placed in a period. Now everything has to be done in a specified amount of time. So most of the times we look at average order value for maybe a month. So you need to understand what kind of revenues are you doing from your orders in a month, and then you have to divide it with the number of orders placed in that period. So that is your average order value. Next is your monthly active users. So you need to find out how many users, total of all the users who have logged on in a month to your app or your platform or your product. Now these days, every product comes with an associated app or a dashboard. So you need to count your monthly active users there. Average revenue per user is like how much revenue are you using from the total number of users in a period of time, mostly a month. So kitna revenue aapko total users se aa raha hai. So that's your average revenue per user. Monthly recurring revenue is like the total of all revenues from all sources that renews on a monthly basis. Next is the revenue run rate. Revenue run rate is basically an indication of, say you are earning 50,000 per month, then what is your total run rate for 12 months. So that's what it tells you कि आपके पास कितना पैसा होगा in the next 1 year if you earn at the same rate as you are earning now. अगर अभी आप 50 earn कर रहे हैं तो we calculate it on that number, because किसी महीने में you will earn more, किसी महीने में you will earn less. So that's what we do, an average kind of a thing, and understand what revenue run rate are you having. Now next is contribution margin per order per customer. Why is contribution very important? Every investor would look into this metric, because it would actually tell you what money is coming into your bank account. It would be like the total revenue, and you subtract all the costs from the revenue and divide that with the number of orders that are placed. So that is what is the money coming directly to your bank account. That's the basic net earning that you have. So this would be looked upon very, very seriously by any investor. This is one very important metric, contribution margin per order. The next important metric is customer acquisition cost. Customer acquisition cost is like how much are you spending to get that one customer who will buy from you. आप कितना खर्चा कर रहे हैं? You will take into account every marketing expense जो आप कर रहे हैं to get that new customer. So average जो Flipkart और Amazon spend करते हैं to get one customer is somewhere around 1400 to 1500 rupees. So you have to be very clear about what customer acquisition costs do you incur, because most of the startups have a huge customer acquisition cost, and that's where they make losses. They spend a lot of amount of on marketing to acquire one customer. So this metric is another one which is always looked upon by investors. The third is metric that is always looked upon by investors is CMAM, which is contribution margin after marketing. So it's like revenue minus costs minus your marketing expense. जितना आप marketing पे खर्चा कर देंगे वो minus करने के बाद आपके पास जो बचता है, that is your CMAM. So that is something which is looked upon very specifically by investors. The next important metric is churn rate. Churn rate is like how many customers are you losing in a year. Mostly it's calculated annually, and the average churn rate that you have in the market is somewhere around 40%. So you should always target that your startup's churn rate should be below 40%. Anything above 40% is like not a viable business for investors. So churn rate मतलब कितने लोग yearly आपके app या product से drop out हो जाते हैं. So how many customers do you lose every year? So that's your churn rate. Next is the burn rate. Burn rate is very important again. So it's like the average amount of cash that you are burning per month. कितना आप per month खर्चा कर रहे हैं is the burn rate. और burn rate decide करता है कि आपके पास कितना runway है. Runway is like how much life, जितना अभी आपके पास से 1 लाख रुपए है और आपका burn rate अगर 2000 rupees है monthly, then how long can you sustain with that 1 lakh rupees is your runway. Why is it important? Because it will tell you कि आपके स्टार्टअप के पास कितना टाइम बचा है और उससे जल्दी आपको फंड रेज कर लेना चाहिए. So burn rate is very important. Based on burn rate only, investor, you should be deciding on what amount to ask from investors, क्योंकि because that's what investors will look at कि आपके पास कितना पैसा बचा है before your startup dies. Another very important metric that every investor would look into is the lifetime value. Lifetime value is like अगर एक कस्टमर है आपके पास तो और वो आपके साथ कितने टाइम तक रहेगा और वो आपको कितने पैसे देगा, दैट्स योर लाइफ टाइम वैल्यू. लाइफ टाइम वैल्यू मीन्स कि सपोज आप एक प्रोडक्ट कंपनी है, आपने एक कस्टमर लिया है, तो वो कस्टमर आपका प्रोडक्ट कितने टाइम तक यूज करेगा और वो आपको उस लाइफ टाइम में कितने अमाउंट देने वाला है, दैट्स योर लाइफ टाइम वैल्यू. That is an indication of how much are you going to earn from one customer. Can you please mute yourself? I'm sorry, but it's very disturbing. Please mute yourself. Please mute yourself, please. It's a request.
Everybody should go on mute. Otherwise, I will expel you from meeting. Just go on mute. I have requested multiple times.
Yeah, because it's very disturbing, that noise.
Yeah. Please, Kumar, you should go on mute.
Yeah, whatever you are doing, please do it on mute. It's very disturbing because I'm not able to focus on what.
Just allow it.
There are a lot of people speaking also. Please put yourself on mute.
Just a second. I will do that. Just a minute.
Yeah, so lifetime value is like how much money are you going to derive from a single customer and what lifetime are they going to stay with you. Now, these are all based on assumptions. So while you are assuming, please also look into the industry standards. When
Just allow me 1 minute.
पंकज सर उनको म्यूट पे डाल दीजिए प्लीज.
Sir, just a minute. Just a minute.
Satish Kumar ji. I requested multiple times. If anybody else from here onwards unmutes himself or herself, I am going to expel. Huh? Just mind.
Maybe orders or maybe time. It's like kitne number of orders and or maybe in what time you get your entire amount of money back from a single customer. जितना आपने spend किया है उसके vis-a-vis say you have spent 4,000 on a customer on various things that you do, maybe your promotions, your marketing, the free products that you give out, the free services that you give out. You need to calculate all the costs and understand in what time frame and in what number of orders are you going to get that money back into your step. So this is an indication of how much time will it take for you to be profitable. Kitne time tak you will be only taking to break even. How much time will you take to only recover the costs that you have incurred. So this will give you a fair idea of how much time will you take to break even. And the next is the viral coefficient. Viral coefficient is very important when you go to an angel investor specifically, because they want to understand what kind of exponential growth your company is going to experience. Now there's a huge formula that goes into its calculation. So basically your viral coefficient should be some more than 1.4 as per industry standards. So once you have crossed that 1.4 ka figure, you are investable by an angel investor. So viral coefficient is like exponential growth that your startup is going to have in the next time frame that you have chosen. So out of these metrics, the ones that you should always be calculating is, one is customer acquisition cost, the ninth one, the contribution margin per order, the churn rate, the burn rate, the LTV, then LTV CAC ratio, the payback metric, and viral coefficient, and the 11th number, contribution margin after marketing. If you have these metrics in place for in your investment financial document, then these are the ones that are looked into by investors, and these are the ones you should be focusing on always. In any round of investment, they'll look at this for sure. Now I have put a reference document for creating your financial projections. You can take reference from this document and create your own financial projections whenever you are going for out for borrowing money from investors. You should always have 5 years projections ready with you. Now all these will be based on some assumptions, so you should always be preparing that list of assumptions that have gone into creating that financial document. So this is one reference which is a good one. It helps you calculate everything, and it has all the metrics and components that I have been talking about in the financial projections part. So you can look into this reference document. The next slide that you would be talking to your investor is your funding requirement. Here you would be talking about how much money are you looking for, kitna paisa chahiye aapko, how much money do you need, and how long is this money going to last. Why is that important? Because say your money is going to last for 18 months, then probably at the end of 12th month, you should again start looking for investment. That's why it's very important to calculate what timeline can your money last. So this is very important. An average investment round lasts for say 6 months. So if you start asking for money today, you end up getting that money almost after 6 months, sometimes more than 6 months. So you should have that timeline ready for you for your startup, so that you know when to ask for the next round. So this is very important. So most of the startups keep they place their funding requirements for a period of 18 to 24 months, because if you place your requirement for 18 to 24 months, then you have sufficient time to focus on your business. So first 12 months you are focusing on your business, and the next 6 months you can then again place your focus on the funding part, because by that time you will have a team who would be working on the business part, and then you can all focus your energy and everything on the funding part. So you should always try to keep a timeline of 18 to 24 months when you are asking for money, and also tell them what are you going to do the money, what milestones are you going to hit with that money, what goals are you going to, because paise aap मांग लेंगे और utilize भी आप कर लेंगे, marketing में कर लेंगे, tech में कर लेंगे, but what are you going to give them back in return is very important. What are the milestones? Say I'll hit this much revenue in 3 months, the number of users, the average revenue that you will do, or maybe you will say that I'll break even. So you need to specify your goals. What kind of goals are you going to hit with that amount? And the last slide, which is a very important slide, is contact slide. Lots of founders send us pitch decks without any contact details, and we don't know whom to reach out in case we like their pitches. So please put out 2 phone numbers and 1 or 2 email IDs. so that investors can always reach you. And if you are presenting in person, you should always stop your presentation at this slide so that any investor who gets interested can note down the phone numbers and the email IDs that we have displayed on this slide. So please do put a contact slide whenever you are pitching. Now let me talk something about angel investment. Angel investment in itself is a big workshop, but I'll talk only the basics because at this stage you need to know what angel investment is like. So angel investor is the first person who invests into your business, a third party person. Now your friends, family and relatives also put money into your business, but they are not angel investors. Angel investors are like registered kind of investors, registered with some portal, or they are known in the industry to be angel investors. These are the first people who will be taking the most risky most of the risk of your business onto their heads, and then they're putting up the capital for you for your startup. So these are the first third party people who will be putting their money onto your business despite the kind of risks they are going to incur. Most of the angel investors see a fail rate of somewhere around 75%, but they still do it because they get high returns on the other investments that succeed. Most of it would be equity financing. Equity is like shares. So most investors would do equity financing, and that's why every startup should register themselves as a private limited company and not any other form of business. They should be choosing LLPs, one person company, partnerships. They don't get funded by third party. So you should always have a private limited if you are looking for funds. So because every investment that happens in the industry is in the form of equity. So typically an angel investor would invest somewhere around 1 to 3 crores, and in exchange they would take somewhere around 20 to 30% of the equity from the company. So if your company arbitrarily say at the time of investment had 100 shares, then 30 shares investors के पास चले जाएंगे सीधे. So that's the equation that happens in India typically. So for 1 CR, somewhere around 18 to 20%, for 3 CR, somewhere around 27 to 30% is the equity they'll be looking at. Some investors also do a convertible debt kind of financing. And now convertible debt is again a little bit beyond scope. Convertible debt matlab debt hai basically. It's like debt is like udhar, the one that you take from banks. So right now when I take from an investor, it's a debt, but later on you and the angel investor decides upon the terms and conditions. At a later point, this debt converts into equity at a certain percentage. So that's what happens in convertible debt financing. So आज you take it in the form of a debt, a loan, and say after 2 years when when you are stabilized and you are maybe raising your next round. It all depends on the investment document that you sign with the angel investor. It will convert into equity. Now, typical returns that angel investors expect from you is 25 to 60%, because out of, say, an angel investor say invests in 10 companies, तो उसमें से 7 companies fail हो जाती है. 3 companies are the only ones जिसमें से उनको returns मिलते हैं. तो वो जिनमें से returns मिलते हैं उनमें से they expect 25 to 60%, क्योंकि बाकी का जो 7 companies में उनको losses होते हैं, वो इस 25 to 60% का जो return आता है वो उससे that gets managed by this amount. Now, how do angel investors decide whether they want to fund you or not? First thing that they look at is the market potential. What market are you operating at? So if your market is sized at less than $1 billion, then very rarely would you find an investor interested in your startup. So you should always have a market that market size that's beyond $1 billion. That's the thumb rule that all investors follow. Then they look at the team, whether they are complementary and diverse, and whether they'll be able to execute. So when you are putting out the team slide, be very, very careful about what you are putting out there. So if you are putting out a team of 4 techies, say from IIT Bombay, then probably you can get funded, but the chances are that they'll still be not interested because you don't have any business capabilities that have come to your team. So you should always have a diverse, complementary skills kind of a team that has all kind of skills to execute a business successfully. The traction slide that I mentioned, some kind of validation, some numbers, some figures that makes the investor interested. Then the investor relevance, you need to find out whether that investor invests in your sector. So you need to find out the history of the investor you are looking at. Not every investor will invest into all sectors. Every investor has an interest sector, and if you go to their website and look at their portfolios, you'll be able to identify which sectors are they investing onto, and choose only those investors जो आपके सेक्टर में इन्वेस्ट करते हैं. And the X factor, every investor is looking into some kind of X factor. X factor is like what sets you apart in the market. How are you different? That's what is the X factor like. Now this is very simple to enumerate, but it's very difficult. It's very difficult to please an investor when you are out there with your pitch. So be careful with these slides. You should always be trying to set your startup out differently so that they get interested. Now, common angel investors in India are like Indian Angel Network. These are the very well-renowned ones: Chennai Angels, Mumbai Angels, Chandigarh Angels, and Venture Catalyst. These are very established, very renowned, out there for a long time angel investors in India. And there are certain people also who invest in their individual capacity, like Flipkart founder Sachin Bansal, Vinny Bansal, then Snapdeal founder Kunal Bahel. They also Ratan Tata, then Paytm guy. So these people also invest in their own capacity. So you can always look at an individual or maybe these bodies. So you have to choose wisely, and you have to determine which angel investor to choose based on the kind of sectors they put their money onto. Not every investor will put money onto your sector, and you need not get disheartened because someone has rejected you. It's because they are not putting, either they are not putting money onto your sector, or maybe you are too early for them. So that's how the angel investment scenario works. That's it from my side. Now I have shared a document by the name Investment Thesis. So this is a document that we always look at from startups. Now this has 13 parts onto this document. This document actually is divided into 13 parts. So what one should be doing if you are actually seriously looking at investment, no, you should be filling this document out with your team members. Sit with your team members and fill this document out. And this document will have all the details pertaining to your venture, and it has answers to all the questions that an investor asks. So document is what we compiled in the last 4 or 5 years in our startup and VC firm. And we realized that if you fill out this document for once, then you have answers to all the questions that an angel investor or any kind of investor that you go to, and they'll be asking these questions only. So you should be filling out, I would suggest you to fill out this document with your team members. So the first part would be like venture overview. It will talk about what kind of entity do you have, what's the name, what website do you have, the incorporation date, and all that details. The next part would be talking about the team members. So who are the team members? How do they know each other? How did you go upon doing the idea generation? These are the typical questions that get asked during any pitching round. So you need to be very, very clear about these questions. So anytime if you have filled out this document, you are always ready with the answers that an investor asks you. Then the unfair advantage, every information that you have about the team. The third part would talk about the problem. So everything, the context, the problem statement, the user groups, the target groups, the depth of the problem, and why do you think the problem cannot be solved. The next part will talk about solutions. You can even put all the documentary evidences together while you are filling up this document, because once you go to an investor and they like your idea and they have decided to put in some money into your startup, you will have to undergo a process known as due diligence, wherein they'll be checking all the things that you have said, that you have claimed, and they'll be checking whether all of that is true or not. If you are talking about some feature in your product which is very unique, their team from their office would be coming to your office and sit with you for 2 to 3 days and complete the entire due diligence process in that period of time. And here in those 2-3 days, you have to show every possible document, every possible process flow. Say you're talking about customers and testimonials, they might even dial up your customers and talk to them and find out whether you are lying or whether you are speaking the truth. That's what happens in due diligence. So whenever you are filling this document, also in another folder in your computer, start putting up evidences of everything so that it eases up the due diligence process when it happens with your startup. So a typical due diligence would check all the documents, just say your incorporation, your PAN, TAN, every financial associated with your startup, then your product. They will actually use the product and see whatever you are claiming is right or not. Then if you're talking about specific customers, they'll call up customers and find out whether the customers have the same opinion as yours or not. Then they will identify everything related to the market. Sometimes if you are carrying out a survey, then a team from their side might come to your survey and actually see how are you doing all that part of the work. So that all that happens in due diligence. The next portion of this document is like addressable market size. The sixth part is competition. Now this will take into account what kind of competitors do you have, and here you have a table in the 6.3 thing wherein you have to put out every competitor's details, and while you are doing this you will know everything about your competitor, because these questions get asked by investors. Then you can do a offering comparison chart. What do you offer and what your competitors offer in competition to you. So that's what you should be putting out. Then what is your moat? Why are you out there in the market to win? You can put out your IP documents here. Like if you have some IP, you have filed patents, trademark, they'll check that document also. So you should be collecting all your IP documents. Then everything related to investment has been compiled into this document. So I would suggest every team to take almost a frame of 7 days to fill out this document, because once you have filled this document out, it's like you have answers to every question that an investor asks. Then the industry lucrativeness, this will talk about the market, the addressable market is lucrative enough or not, and then it will talk about what kind of political economic forces operate in that market, whether you'll have some restrictions from the side of government, whether you'll be needing some licenses. You will have a clear picture of how to operate in that market. The third part, eighth part is the business model, the model that you'll be adopting to get money onto your business. How will you get that money? The distribution method, the renewal method, the unit economics that I was talking about, the LTV, then the cost of goods sold, everything has to be calculated and put out into this document. Then how will you grow? The ninth part is like execution. How are you going to go to the market? What will be your marketing strategy like, and what kind of costs are you going to incur will come into this document. What kind of technology development have you undertaken? What product development are you doing? The 10th part of this document is like talks about the next 12 quarters. So next 12 quarters is like what funding rounds will you have to take in those quarters, and what kind of money would you be requiring for sustaining your business would go into this part. So you will have clear idea of what comes in quarter 5, quarter 6, and whenever you are doing your business, you can even open up this document and see whether you are adhering to your own set timeline, and whether you are doing what you have the targets that you have set yourself up for, whether you are fulfilling them or not. The 11th part will talk about risks. Risks are very important because you need to identify what kind of risks will go into the business. What risks could actually make your business die down, and what kind of mitigation plans do you have. At present, some of the startups won't consider this seriously, but trust me, at later point in time, you will see that all of it needs to be documented, because once documented, you always have a document in hand to refer to when you have landed up in some kind of trouble. The 12th would be your capital structure. What kind of shareholding do you have right now, and what investments have you already raised, and how are you planning that the next investment round would come into this portion. And the 13th part is investment and exit, wherein I have enumerated what stage investment is at what amount, and what kind of equity would they take from you. For example, for seed stage is the one that angel investors come into, and what kind of valuation they'll be looking at, what kind of equity you'll have to dilute, and what kind of timeline would be required. I've enumerated everything onto this document, so please go through it. You will have a fair idea of how investments go about in the startup community, and at what stage you should be approaching whom, and what kind of amount you should be expecting at that stage, and what kind of dilutions from your side, I mean, what kind of equity would you be losing at what stage, is enumerated in this table. Based on this, you can then decide what kind of capital stage are you at, what investments are you looking at. You can even enumerate the potential investors who could be investing, and you should be sending your pitches across to them. So this is what I expect everyone to fill up in the next 7 days, because it would give you a fair idea of where you stand and what is the current scenario of your startup. That's it from my side. I would be happy to take questions now.
Thank you very much, madam. So now we are open for the question answer session. If anybody is having any query regarding this session, they may please ask. You can now unmute yourself also. This reference document, someone has asked in the chat that can the link for reference document posted in the chat. I will be emailing this. I have already sent you this. I'm again emailing it. You will receive in 5-10 minutes. So if anybody is having any query, please come out.
I can even share the PDF with you. We can maybe share it with them.
Yeah, that will be great. Please share that with me. I'll attach that in the email.
Yeah, sure. I'll do that.
Any questions? You can also ask in the chat box. Okay, I think the session was pretty much clear to everybody. So I hope there is no question.
I think they either they have understood a lot or didn't understand anything.
The session was pretty
No, sir, it was very
self-explanatory, so I think they have understood very clearly. If anybody is having any query, they may please ask.
Ma'am,
No, sir, everything was clear.
Yeah, please come one by one.
yes, sir. So, ma'am, the query is like you mentioned that in the case this is an enterprise or a B2B software, then we need to have letter of intents.
Yeah.
So we are operating in the education space, and we went to educational institutions like schools. They denied us any LOIs, saying that
Mhm.
we should trust them on their word.
Mhm.
How we can tackle this? I mean, we have 3 pre-orders, but we don't have any legal work to prove it.
How do you say that they have pre-ordered? Have you got any money from their side?
No, ma'am, that's the point. So we don't have any money from them, and they don't even sign LOIs. But they're like, we have told you, we have given you a word, and we won't go back on it. But how
Okay,
can we
so do one thing, draft an MOU and try to get that MOU signed from them. So that way you will have a clear picture of whether they'll be wanting to actually buy it out from you, or is it like just a fake kind of a promise?
Ma'am, actually, we actually tried MOUs first, and they were skeptical on signing anything. They're like, there's a management who needs to approve this first. So they're telling it's a long process. So we cannot sign anything. You have to trust on a word. We start our sessions from April, and then we'll call you in the March.
Okay, then you need to do a follow-up with them right now, so that whenever I mean, schools have a very typical pattern that they decide the budget for their next session in March only. So that's when they'll be deciding whether they'll can accommodate your costs onto their school's kharcha or not. So that's when you should be following up with them, because before that you cannot do anything, because school ka management is like a long process. And if you are wanting to get investment before that, then practically in India, nothing of that sort is possible, actually. Because you need to have that document with you. Either some kind of transaction needs to come to your bank account, or maybe a promise document or a letter or an agreement needs to be in place. Even in that case, an angel investor or any investor for that matter won't trust you, because schools का क्या है ना, वो लोग back out कर जाते हैं. So you need to wait till that time. That's the only solution that you have right now.
All right. So exchange of emails won't work here?
Not actually, because when the period, I mean the March time frame comes, no, they'll have trustees meeting, and that's when they will put up your proposal in front of those trustees and find out whether actually the school would be ready to pay or not. That's the problem. So you need to wait till that time.
All right, sure, makes sense. Thank you.
If you know any parent who has contacts till trustees, then try to go through that route.
We have got into trustees, and trustees and the entire management is sure. That's when we have a pre-order, but they are not. They are hesitant to sign anything. So
Yeah, they won't, because you know what, schools में ना parents का भी होता है बहुत कुछ. I mean, parents need to also comply with what the school says, because ultimately it's the cost. It's a cost that will be added to parents' pocket, right? So they'll have to have a meeting with the parents also, and the entire management needs to decide that they'll be investing onto something like whatever you are offering them. So you need to just wait till March because they'll be allocating the budget for the next year in the month of March only.
All right, makes sense. Thank you so much, ma'am.
Yeah, thanks.
Ma'am,
Yeah, sure.
ma'am, am I audible?
Yeah.
Yes. Ma'am, our project is for the defense sector, ma'am. So since it's for the defense sector, we are not able to find customers or like test our product with them. They are like so much into the security and other things that we need like prior license and other stuff. For us to get a prior license itself, there is like so much of process going on, and there's so much work going on for that, ma'am. And we are literally like not eligible to get those things. Only through investors and other things we can go to it. Even though there are some private investments in this defense sector, not everything is given to us. We are not able to go and speak to the customers, the real customers. So how do we go about this, ma'am? Because it's a very good project and it's a very good innovation. But how can we take that forward, ma'am?
Who are you talking to currently?
I have tried to like speak with some scientists in this regard, ma'am, the basic DRDO scientists, but they are like, no, it is our internal policy matter, the first thing. And the next thing, when I tried for some investors, they are like, go through government competitions, like these contests. They are like, go through the government contests.
Yeah, you will have to go through the Ministry of Defense contests. Because you know what, when investors see that you are dealing with the government, no, the government is like a lot of delays and a lot of compliances that you need to have. So investors are a little wary of when you are working in the B2G sector. B2G in the sense B2 government sector. So what you need to do is penetrate through the ministry competitions that they put up. I mean, Ministry of Defense does put up competitions. You need to go that way. You need to get funds that way. Even I believe DRDO and defense organizations do put up competitions for startups. You need to go through that way because investors is also not the right route to approach these kind of segments. I mean, B2G is not a very lucrative segment for investors as of now because it's like a lot of permissions, a lot of licenses, a lot of things that you need to comply with before you can enter the government sector. So it's like you need to go that way only.
Okay, ma'am. There are actually some private companies like L&T and those things.
Yes, yes.
They
There
can
are
also take
companies
this up.
who work for Ministry of Defense and they also float out competitions. So you need to see who is the defense sector working with and then check out, go to Startup India portal. Most of the competitions get listed there. Most of the competitions from any ministry, from any private company, they do get listed there. Do go to Startup India, you'll find one. For sure, you'll find one.
Ma'am. Okay, ma'am. Thank you, ma'am.
Yeah.
Ma'am, following from the previous question, does it at all make sense to go for startups, to go for project-based startups, which means that you get a job when someone gives you one project and then you have to hunt for another? Does it make sense to have a startup like that at this age?
At which age?
We are college students right now, so does it make, yeah.
See, if you are talking about tendering kind of things, then just freshly pass out of college, then you should not do such kind of startups right now because it is not going to get you any money. Because your startup won't qualify for most of the tenders that get floated by government or some serious big bodies. They have their own criteria. They'll have some deposit amount that you will have to pay, and I don't think you are in that stage. So go for a startup which is feasible at this point of time, from where you can get a sustainable amount of money. And if you want to get into such things, no, wherein you will be dealing in crores with big companies or government, then try these startups out after you have gotten an experience of 3 to 4 years in the market.
Sure, that makes sense.
Or else you won't have money to sustain.
Okay, ma'am.
There is one question in the chat that if my competitors are international, do we need to include them?
Yes, yes, you need to include global competitors as well, because your competitors can enter India at any point of time. So there is no restriction for them to enter India. So you should list out your, if they are big enough and they are geographically, placed in many countries and not limited to a single country, say only Finland they are operating in, then you need to list out those competitors who are operating in multiple companies. Because see, for example, Amazon was operating out of US and then they suddenly came to India and they took over Flipkart like anything. So you have to have an eye for global competitors as well. Not for very country specific competitors, but
One question is there. We are working on healthcare project and we think our product is helpful for big hospitals. And we have a question whether medium or small scale hospitals will buy it or not.
it will depend on the price of the product that you are,
Exactly.
because they need to have that kind of budget with them. Medium and small scale hospitals बहुत cash tight होते हैं. Not necessarily they'll have the money. Apollos and Max kind of hospitals, के जैसा money they won't have. So it's like you have to have what kind of budget and what is your product price at. 1,000 to 1,200. Yeah, it is a possible feasible idea for a medium or small scale hospital. It depends on how many patients do they have.
Okay. Any other question?
What does biopackaging mean?
You can unmute yourself. Swati, you can unmute and ask the question.
No, I'm asking biodegradable packaging for what? Food. Yeah, it's a feasible idea. Most of the companies and everything, the government is also very convinced about biodegradable packaging. No one would ever deny you that biodegradable packaging is a very bad idea. Even McDonald's has its own biodegradable kind of straws and plates and everything. So you can always convince the market about biodegradable, provided it doesn't add to their cost too much. It shouldn't be a very costly thing for them.
Okay. Thank you. I hope there are no other questions. So we'll be calling our further system. Thank you very much. Anyway.
Excuse me. No question.
Yeah, Bilalji, please. Yeah, go ahead.
I wanted to ask that our technology is led, but it's more of a technology and on it and research papers. Technology is focused for companies. So will it be a feasible concept in execution?
Will it be a feasible?
Ma'am means feasible concept for this type of funding,
Or
this type of
investment?
Fruits and vegetables. So as it is a coated on the basic perishable food, how can I find the target customer for this?
Okay, madam, would you like to answer that?
You have devised a nanotechnology coating for fruits.
I have used the nanotechnology to make a solution. So it is a solution that is coated on the fruits and vegetables instead of coating with wax. So I'm replacing this wax coating with my edible nano coating.
Okay, then you should be talking to. And what does this coating do basically?
Sorry, ma'am.
What's the utility of this coating?
So as we all know, like wax coating and everything have its own side effects like cancer and all. So this nano coating won't have any side effects, and this is naturally derived product.
No, I understand, but what does it do? What's the value add when you coat your fruits with this?
To increase the shelf life of this fruits and vegetable.
Okay, then you should be talking to cold storage or storage companies. Because they are the ones who would be storing the fruit, right? So they would be wanting to increase the shelf life of the fruit.
Okay, ma'am.
It is not farmers who are going to store it. It's the cold storage, the government who store these kind of products. So you should be approaching them.
Okay, ma'am. Yeah. Thank you.
Yeah.
Ma'am,
Yes.
ma'am, and connect to my previous question regarding the defense thing, ma'am.
Yeah.
If I lightly modify my customers, like instead of the defense sector, if I have it like something like a security application or something of that sort, it will be applicable for commercial customers also, ma'am. If I do a little
Yes,
change
right.
in that,
And
then my market would change. So
I
in
need to
that
first
way,
understand what kind of security solution is it? Is it a cyber security solution or is it a general security solution?
ma'am, it is basically a surveillance related, ma'am.
Okay, surveillance related solution. Then there
Yes,
are a
ma'am.
lot of commercial companies also would be interested in it. There are CCTV companies and I don't think you need to be restricted to defense sector only in that case.
Okay, ma'am. Then
You know what? You should always be trying out your first solution with commercial customers before approaching the government. Because government will always look for some kind of validation in the market. Once you have had validation from certain number of players and say good trusted names, that's when government does entertain you in that matter.
okay, ma'am. Then I'll pitch my business plan in that way, ma'am.
Yes, right. You can tweak your business plan to cyber security and the general security companies, the surveillance companies. A lot of companies are there who would be interested in these things.
Okay, ma'am. So I have to approach the surveillance companies and companies related to that, ma'am.
Yes, you're right. And later on, when you think you have reached that stage where you can maybe probably approach government, and also in the meantime take part in government defined competitions which are from the side of government, so that you are, getting where you want to actually reach.
Okay, ma'am. Thank you so much, ma'am.
Yes, right.
Ma'am, I have one more question.
Yes, please.
Statistically, does it make sense that I diversify my product? One is a high-tech solution and one is a low-tech solution. The low-tech solution is intended for my consumer market, probably storing it, selling it at brick and mortar stores, whereas my high-tech solution is reserved exclusively for my commercial clients. Do these things normally work out?
I have no idea about your solution only. You can give me a
All right.
line about what
Yeah,
kind
yeah.
of solution is it?
We are basically into drones, and we've spent a lot of time trying to close these big commercial customers, and the problem again is that it's a long process, it's a long
ये बात
Mhm.
सही है
neither are we, excuse me, and neither are we able to go lean about it, because unless we don't close one deal or two deal, we cannot modify our product. Whereas when it comes
उसको ये भी दे देंगे, उसको वो भी दे देंगे. It doesn't work that way. So
Sure.
stick to one big idea, take money for that, but in the meantime also keep viable sources of income for you so that you can sustain. It's like more about sustaining for the first 1 or 2 years.
definitely, that's great, thank you.
Yeah.